has been trading me, and I've lost a lot of money. I may not have lost up to what you have lost out there, but I've lost quite some amount. Yes. Until I met Wahili Markets. I used to believe and I used to think there is a holy grail to Forex trading, which a lot of professionals do not tell us. But meeting with Wahili Market, I found out there is no holy grail anywhere. The holy grail is you, because you are the only constant thing in the market. Good morning, everyone. My name is Wahili James, graduate of the PMI Professional Mentorship Initiative of the Wahili Market, a Forex institute. I just finished a 7-week intense course, beginning from the fundamentals of Forex. We delve into the technical aspect of Forex. We moved a step further into the quantitative aspect of Forex, which most people do not even talk about, except the institutional traders. We moved into portfolio management, building up a portfolio, speaking about diversification. Not just that, we moved into economics, understanding the law of demand and supply, how it affects the currencies we're trading. We moved into macroeconomics and microeconomics, these things that affect the policies that affect the movement of prices. These are the things and much more that we learned in Wahili Market. Thanks to Wahili Market for unveiling this secret to us. I can boldly say anywhere that I'm a trader. I am a trader. Before, Forex traded me, but now, not now. Now, I'm a better person. And I'm encouraging everyone out there, if you have ever lost money before, or if you've ever dreamt of trading Forex at all, or whatever kind of trading, be it commodity trading, you want to trade oil, any form of trading, come to Wahili Market. You will gain value for your time and value for your money. Thank you very much, the Wahili team. Thank you, Mr. David Alagbada. Thank you, Mr. Joshua. Thank you, everyone. I remain James Adewi, a proud alumni of Professional Mentorship Institute of Wahili Market. Thank you.
Hello, everyone. Welcome to the early trading course. How are you doing? I trust you're having a wonderful, wonderful evening. My name is David Alagbada. I'm the CEO here at Wahili Markets. I'd like to just express my very, very huge appreciation that you showed up here today. We promise that you're going to get a lot of value. We're super excited to have you here. So on behalf of my entire team, we say welcome. Welcome to Wahili Markets ETC, a short form for the early trading course. In a short moment, I'll be introducing what our community is about, who we are, what we do, and hopefully how we can help you in your journey to success within the financial markets. But before we get started, I can see we've had quite a number of people. Let me just say my hellos to the different people who are on the call who have indicated interest, from Ijoma Amadi, who was he was saying good evening, to Jonathan from Lagos, to Mbaye, to all of you, welcome. To Michael, to Anita, to every single person. Super excited to Linus, to every single person who is in on this call. This is going to provide you an interesting introduction into the financial markets. It's going to provide you an introduction to the opportunities that you can take that will help you increase your income through the financial markets. Okay, so without much ado, I'd like to just go straight into what we have for you today. So I'm super excited. Can't wait for us to begin. So I'm just curious here. Even as we have more and more people sort of joining on the call, I'd like to know. I'd like you to indicate if you have traded before. If you're a newbie, what we like to term newbie within the trading community. If you're a newbie and you've never traded before, you've never demo traded before, or if you have, I'd like you to just indicate by just putting it in the comment section. Oh, okay, I'm new. But if you've traded before, just also indicate. If you're somebody who has traded, who is currently struggling with finding that consistency, it's one thing for you to be in the financial markets. It's another thing for you to get to the point where you can actually make a mainstay income from the financial market. So what your category is, I'd like you to just indicate them. Let us begin to get a more engaging class, even as we build into what we have for you today. So please, I'd like to see those comments. If you're new, just indicate I'm new. Okay. Total newbie, never heard about the financial market. So I can see a comment who is here. I can see Linus, Mr. Linus, you said, oh, I am new. I can see Tega, you said, I am new. Mr. Market said, I've traded and I've lost money. Okay, so we're getting to see like different comments. So just keep some of those comments coming in to just basically give us a sense of where you are, what point you are, and hopefully this particular class is going to give you a lot of value, whether you're new or you've traded before, whatever it is that is your own reality, whatever point you are at in the journey. The goal for us here at Wahili Markets is to help you. We want to be your friends. We want to be your go-to community. When you think about trading, when you think about what kind of community can support you, we want to be that community. For myself as a CEO here, to the different members of my team, to the entire community, we want to be that community that you come to, and we want to help you along, and hopefully to such a point where you can actually say yes. We have I'm here. So Mr. Goodlove is saying, I'm presently demo trading, no consistency in making profit. So hopefully we're going to change all of these things. Hopefully the nudges that we're going to give you here will change the dynamics. Okay, really will change the dynamics. If you've been struggling in the market, we will touch on some of the reasons why a lot of people fail. Okay, why we have such a small percentage of people. There are statistics. If you are in the financial market that you hear and you begin to ask yourself, why do so many people, is it not just to open up a chart and look at the assets? Why do so many people struggle? Why do they struggle to find that consistency? Why can't people come into this market, learn what they need to learn, and just be successful? We'll touch upon those things, and hopefully the lessons that we have here will also be useful for people who are new. So if you're new, just coming in, as you approach the market, you begin to understand the reason why a lot of people make the big mistakes that a lot of people make in their journey in trading. And hopefully you can, from the very beginning, circumvent those mistakes and go on to actually becoming successful. Once again, welcome. I'm going to be sharing my screen shortly, delving directly into the presentation that I have for you today. So from whichever class that you're in, we promise you that you will get a lot of value, not just from this particular session, but for subsequent sessions, even as we go along the way. Okay, guys. So as you know, this training is facilitated by Wahili Markets. Okay, Wahili Markets, we like to call ourselves your freedom, your partner to financial freedom. And financial freedom is something that a lot of people desire, okay, because if you're financially free, I mean the extended benefits for not just yourself, but for your family, for your loved ones, for for your future. I mean the benefits are immense. Okay, so this particular course you're on is one of a series of courses here at Wahili Markets. This is called the Wahili Markets Early Trading Course. Now, this is a foundational course that is useful for anybody who's just coming into the financial market, who wants to properly understand, okay, who wants to get a solid foundation as he approaches the financial market. You want to ensure that you are not getting the wrong expectations when you're coming in. You want to ensure that you're not getting the wrong impressions. You want to ensure that you have this a solid foundation as you head into the financial market, as you journey into becoming a pro trader. Okay, the journey of success it begins from that one step, and hopefully this particular course will provide you that sort of early on step that gives you just what you need, okay, in order to be successful. Some people, one of the big problems that they have today is the fact that they don't enter the markets the right way. They enter through excessive marketing, through very ridiculous expectations sometimes. And this affects them, even if they're trading, even if they continue to trade for the next 5 years. They develop the wrong habits that become very difficult to change as they go along. That's why your early trading course is really important. It's very important because I mean, if you're a biblical person, even the Bible says that if the foundation be destroyed, what can the righteous do? For as a matter of fact, any building that doesn't have the right foundation, that building, is not going to stand the test of time. Any trader that doesn't have the right foundation in trading, who just, sort of slugs, just jumps from one resource together, just sort of jumps into, trading without that type of right foundation, that trader is not going to stand the test of time. And that's just the truth. So the early trading course is free. It's a 3-day course. So we're starting today, 18th of February. This is the first day of a series of a 3-day course that we have. Okay, all the days. So we'll come on live in each of these days, and each of these days will give value all 3 days. Okay, and hopefully at the end of this course, you have a solid foundation that you can go ahead and build upon. You can now take other nuggets to add on as you seek to become excellent in your trading journey. Okay, but before I go on, let me just introduce myself a little bit. My name is David Alagbada. I'm the faculty here at Wahili Markets. I am the founder and chief mentor here at Wahili Markets. I've got an MBA from the University of Roehampton in London. I've got 8+ years discretionary trading experience, 5+ years a system and quant trading experience. What do I mean by system and quant trading experience? Basically, you're using algorithms, trading algorithms. For people who know about trading, that there's a side of trading that involves algorithms. So I've been a past market analyst at A2Z Forex. A2Z Forex, you can Google that organization. It's a leading market analysis organization in the world. I've been past head of partnerships at FXDM. I've also been a traders and trainers mentor at FXDM in Abuja, Northern Nigeria. I've been past head of Forex Educational Center, on and on like that. I have had the singular, probably what most excites me about my journey in trading is the fact that I've had the pleasure of working over 5,000 people, speaking to over 5,000, helping over 5,000 traders through the international trading events that I have had across multiple countries. And I'm talking in different countries, Kenya, Ghana, of course, several cities in Nigeria, on and on like that. And I started out, interestingly, for just to let you know that it really doesn't matter where it is you're starting from. I started out with a bachelor's in engineering. So these are just some of the pictures of some of the Forex events that we've had and across different cities. Okay, and the pictures here in Abidjan, in Cote d'Ivoire. I can see pictures here in Kenya, pictures in different parts of, essentially, of course, in Nigeria as well. So my experience, okay, going through a number of different phases, okay, as a trader, my journey, my personal journey as a trader, first of all, coming in with inappropriate expectations, okay, and I'm not entirely surprised because a lot of the times when people come into the market, they come in with marketing, with the, they come in with they come in with the sort of flash and the the excitement of the of flashy cars, and that basically that kind of lifestyle information. I came in with that as well, but interestingly, I hope to be able to pass on a couple of the nudges that I have had in my trading journey to help you on your own side. Okay, so let's talk about Wahili Markets. If you're here right now, I imagine that maybe you've had a couple of interactions with Wahili Markets. Let's talk about Wahili Markets a little bit, like this company that is providing this platform. So what we are at Wahili Markets, we're a professional trading education and mentorship organization. So we have the skill, we have the ability to professionally train individuals and mentor them onto success in Forex. We continue to curate our programs in such a way that they are able to meet the needs of people who seek to become successful. Okay, we also provide ongoing resources for traders, signals, tools, resources, scripts, indicators, mentorship sessions, the works, really the works. And in the space of this, just before I came on, I noticed there were a couple of testimonials of some of our programs, people who have been impacted. This gives us a lot of joy because we know that as we continue to put out this value, and hopefully as you continue to get this value, you can take this value and make it you can own it. You can own that value and use it in your personal lives and even in your own journey in trading. We also do custom trading publications and research. We facilitate a community support for traders. Now, already in our Telegram channel right now, I think we're in excess of maybe around 1,300 people within our Telegram community. It is our own singular hope that before the end of the year, we're going to get about 20,000 communities that's 20,000 strong of people who really are interested in helping themselves. Okay, we want to grow as traders. We are going to begin this journey. We are going to do it. We are going to put out excuses, okay, and do what needs to be done in order to be successful as a trader. Wahili also has a sister company called Wahili Capital, which is involved in capital management services, which basically means trying to put the skill of trading towards helping capital to grow. Okay, the ultimate objective of trading is the growth of capital. Okay, XYZ capital, okay, trading skill, merge those together, then you have an increase in that capital. That's ultimate goal. Then we also develop custom portfolios suited to client risk reward appetite. And a lot of the tools and the tricks that we have learned over time in order to be able to effectively deliver on it. As you follow us in our community, you begin to understand some of these things. We also do alternative asset diversification for traditional investors. So traditional investors, more traditional assets involve things like buying corporate bonds, buying government bonds, some of those things, treasury bills. Those are relatively more traditional investments. So what we do is that here at Wahili Capital, on that aspect of our organization, is to provide alternative assets. Okay, what are alternative assets? Things that are not just very conventional, but you can put money in, or you can divert some capital towards that can see a lot of growth. Okay, so we do alternative asset consulting as well. But that's what we do. Okay, if you want to find out a little bit more about that, we have a number of channels that allow for you. We have a discourse group on the Wahili Markets Telegram channel. The main Telegram channel that you probably connected to. Okay, you probably cannot comment on that, but we have a separate discourse group that is really growing right now. I'm seeing a lot of people taking advantage of that group to ask questions. Okay, So you can take advantage of that as well. Okay, if you have questions about any of these aspects. Okay, but let's go into why you should be trading the financial market in these times. Why should you trade the financial market in these times? Number one reason is because, unlike such assets as real estate, which, it's got its own metric and it's got its own value in terms of, I know it's a hugely popular asset class. People in Nigeria, a person makes money, first thing is thinking about, oh, how do I build a house? But one of the reasons why it's good for people to trade the financial market in these times is because, number one, it's a cash asset and it's available on demand. Cash is king in these times, as a matter of fact, because what cash allows you, if you have a cash asset, it means that you can take opportunity, you can liquidate either fully or partly when opportunity comes. Okay, investments such as more traditional ones like real estate usually have a much longer tenure of ROI, of return on investment. Okay, so trading the financial market allows you to take opportunity and allows you to be closer to cash, because if you have money trading in the financial markets right now, you can easily, a lot of brokers allow you to withdraw your capital plus your revenue these days, even in the space of 24 hours. So even if you had like 10 million equivalent, maybe about 20 something thousand dollars, if whatever it was, or $100,000, whatever, you could always get back that money. Okay, useful if you see an opportunity. Okay, easier to liquidate. Okay, and that's something that a lot of people don't really consider a lot. Okay, when they're investing. Another thing is an alternative source of income. So what we do here at Wahili Markets is we will teach you how you can begin to trade successfully. Now, that skill now filters into allowing you to have an alternative source of income. Okay, and that's really convenient to service. It doesn't require a lot of your time, because you don't have to be you don't have to give an entire day for instance. You just have to know what you need to look out for. Okay, in the financial market, you have to sort of integrate that with your life, and then the rest is history. Another reason you should trade right now is risk is totally in your control. Now, a lot of people, I've heard so many people ask somewhat very or make ill-informed comments about the financial market, such as, oh, what if the market crashes? Oh, what if, stuff like that. When you hear people talk like that, the first thing you should understand is they don't have enough knowledge about it, because in this market, risk is totally in your control. I'm not sure there are a lot of markets, there are a lot of assets for which you can fully 100% control your risk as much as what you have in the financial market. So for every opportunity you're trying to take, for every particular asset you're trying to buy or sell, because rarely, I'll get into that in just a moment, trading is about buying and selling of assets. Okay, assets that can give you value, okay, can increase in value and help you increase your capital. That's the whole object of trading. But the point is, at every point you're doing that, risk is totally in your control. Another reason is it's a skill for life, guys. It's a skill for life, transcending borders. It doesn't matter where it is you're living, whether you're here in Africa or you're somewhere else. You learn the skill. I have friends who have had the opportunity to travel, to new lands, and before such a time as they were able to, sort of properly structure and integrate into the sort of workforce of that community, of that new nation or whatever, they already, because of the skill in the financial market, they were able to create an income for themselves. So these are just a couple of reasons. Okay, it's also critical for general investing knowledge. Okay, you, as a trader, you become better at evaluating what a good investment is or not, because you're thinking about it as a business person now. In terms of a business person in financial market, you're looking at, okay, what is the risk? Okay, what is the reward? What kind of do I have? What kind of exposure do I have? What kind of opportunities do I have? On and on like that. These things are important. Now, another reason is, in such a climb as what we have right now. What do I mean by such a climb? In an investment climb such as Nigeria, such as we have in Nigeria, where yields are negative right now. If you are listening in this call and you don't understand what and you've never done any investment, maybe this might sound strange to you, but anybody who's listening on this call and has been actively investing, and by the way, if you're in on this call and you you aren't yet investing, you are putting yourself at a huge risk. Okay, whatever it is that you earn, whatever that is, okay, the best way for you to plan for the future is even to begin to get nicks, and no matter how little it is, begin to set something aside. Even if you are, for instance, a young person, you don't have kids yet, as an example, you want to think about it, begin to set up a portfolio for your children. It makes a lot of sense when you think about it. So a lot of people are scared of raising, of the cost, the increased cost of raising kids, and on like that. But not a lot of them, I don't see a lot of them actually begin to plan for those kids from now. I don't see a lot of people opening accounts for their kids and saying, "Oh, let's keep some money in there for the kids, 1,000, 5,000 in naira, 100, whatever it is, whatever surplus you have." So I'm talking about investment now. The first start of it is keeping something aside, but the return here far outweighs the return potential, far outweighs inflation. Okay, now inflation in Nigeria right now probably is bordering almost at around 18%, something around those regions, a ridiculously high percentage. What that means is that people who invest, after you've done the first one of keeping money aside, you have to find creative ways to ensure that that money replicates itself at a pace that is higher than inflation. If you don't do that, basically your money is losing value. The purchasing power of that money is reducing. I hope you guys are with me, by the way. I'm going to stop this call a little bit to be sure. We're going to get in trading in just a short space of time, but I'll stop just to be sure. I always like to do this just to be sure that I'm being followed, that I have a number of people who are here. Okay, wonderful. I can see our call times are increasing. But this nudges, everything that I'm sharing right here on this call, everything I'm sharing right here on this call, super useful for you if you want to live a financially independent life. So as we even get started with, okay, what is trading? How can we participate? What do we have to do? What steps can we take? How do we ensure that we don't make the mistakes that are prevalent in here? All of these questions, hopefully we'll be able to answer. So by the way, if you have any questions, okay, at any point as I roll through my presentation for you today, as I continue to go through, please make sure that you drop a note here on this. I will be able to personally attend to you, but when it gets beyond here, we have, like I said, we have a discuss group on the Telegram channel. That discuss group, if you're on the main Telegram channel, just click on the look for one of our past messages, and then you can see any of our mentors. We have amazing mentors here, very helpful individuals who can then go on to help you. Okay, guys, so let me continue with my presentation for you. You can leave those questions as I mentioned. All right. So yeah. So I was getting into what we do, okay, or I was getting into why you should trade in, and I've gone through a number of these points. It's a skill for life. It's critical for general investing knowledge. Its return far outweighs on and on like that. Now let us get to the financial markets. Okay, let us get to the financial market. What is the financial market? There's a lot of buzz right now in this time right now about the financial market, about the opportunities. People are asking questions. A lot of people, I have a lot day to day, people are asking me questions. They're coming asking, what's the thing with this cryptocurrency, for instance? What's the thing with Bitcoin? I mean, what about Forex? We've heard about it for a long time, but seems like a lot of people lose money in there. What is the thing? Okay, so I'll explain to you the totality of all of these things you hear. Okay, these different we call them asset classes. So things like cryptos, for instance, are becoming a fast rising asset class. Then we have Forex that has products in the financial currencies traded against another. You have stocks, you have a number of those things. But the key thing to note about this thing is that the financial market is that place where you have buyers and you have sellers come together, okay, to trade financial assets. Okay, so those financial assets are things like stocks, things like precious metals, gold, silver, platinum, palladium, and a number of those things. They trade their prices Then you have Forex pairs, you have commodities, you have derivatives, and on like that, of course, including cryptos and the likes. You have a number of different assets. Now, so you have these two participants coming here, okay? These guys on this side and these guys on this side coming here, and they begin to look at the prices of all of these things. One thing you should know about all of these things is that they are taken as an instrument of value, or like an asset of value. What is important to these traders here is to use their price changes, okay, as a change in price to profit, okay? And that's really what players in the financial market do. So as you come into the Forex market, understand that you're coming into a subset of a larger financial market. The information, the knowledge that you have in playing in this market at this point will be profitable for you, even as you approach the stock market, even as you seek to do commodities, like, hey, you want to trade on the price of coffee, for instance. You want to, you want to trade on the price of crude oil. The thing about it's for a lot of people who listen in. What you need to be skilled at is your ability to understand when it gets to demand or supply on these assets. In basic economics, okay, when an asset gets to a point where there's a lot of demand for it, okay, when any asset gets to a point where there's a lot of demand for it, what happens to its price? You guys can put in the comment. I want it to be a little bit interactive. When you have a particular product or a particular asset, when there's a lot of demand for it, what happens to its price? Okay, so if you said that the price rises, you are right. When you get an asset that has had a lot of supply, what happens to its price? Its price falls. So in trading in the financial market, what traders are actually looking at is they're looking at all these different assets. Okay, all these different assets, stocks, precious metals, forex, commodities, derivatives, but all of these different assets, and trying to preempt demand and supply. That's the summary of it. Now, if they can effectively do this, they take some capital into the market. If they can effectively preempt demand and supply, then they can profit and raise capital. They can profit on the prices of these assets. That is why trading skill is somewhat independent of the asset. I don't know if you guys are getting what I'm saying. So it's the skill is ubiquitous to the asset. That is, you can apply that skill profitably in different markets. You just need to understand a couple of things along the way. It's not supposed to be difficult for a Forex trader to effectively trade cryptos. It's not a different thing. So you hear traders come in and say, oh, well, I'm new into Forex. I'm trying to understand whether or not I should do Forex or cryptos. You should learn trading. That's where it begins from. Learn how to understand whether an asset, whatever asset it is, gets to a point of demand, or you can preempt demand or supply. Learn the principles of that guide the price changes in the financial market. I hope I have a listening audience here as I go on. I hope I have a listening audience. If I'd like to see you just comment. So if we have all of these different asset classes, why is it that if you want to trade in financial market, it might be a good idea? Okay, my personal opinion, and this is not just an opinion from a blind spot. I've got a number of years of experience to be able to sort of cook this opinion up. Why I think that it's a good idea for you to start with the Forex markets is because, first of all, it introduces you to the larger financial market trading. Do you understand? This is not just about it's not just, it broadens your mind. It gets to be, especially if you are learning it the right way. Of course, that simply means that there's a wrong way to learn it. And I see a lot of people are actually learning the wrong way. But if you want to be a player here, that this skill is going to be useful for you. It will be useful for your finances. It will be, and I'm not just talking about to give you the bragging rights, oh, I'm a trader. It's not about the bragging rights. It's about your results at the end of the day. So it introduces you to the financial market. It helps you learn principles that are applicable across multiple asset classes. I've mentioned that already. Risk is in your control. I've mentioned that. Now, this is interesting. It teaches you how to profit when the prices are rising or falling of a particular asset. There's opportunity for you to profit in rising and falling markets. Now, there are a lot of people that I see who trade cryptos these days. Some, because there's a it is said that in a bull market where the trend is rising, everybody feels smart. And that's exactly what's happening these days. I see a lot of that. Due respect to everybody who trades and who sort of plays in this crypto space. But what I see right now, there's a massive bullish run for Bitcoin. Everyone is getting up and purchasing the asset. Everyone, a large number of people who are purchasing the asset are getting increasing value, but everyone feels smart. But that's what happens in a bull market. Okay, so my point is, you can go beyond just being lucky based on a particular bull run to understand the dynamics of the behavior of price, to understand that even in a bull run, there's a correction. There's a point where in an uptrend, prices need to correct itself. To understand how to preempt those types of things. Preempt it. Position yourself the right way in order for you not to lose your profits or lose your capital. So you can understand how to position yourself in rising and falling prices. Okay, you can even understand how to take advantage when prices are falling. Who says the only time that you can make money from an asset is when the asset is rising? It's not true. The trading in the financial market, starting with the Forex market, helps you to understand that even when the price of this asset is falling, you can short sell and you can take advantage of it. It's also critical for general investing knowledge. It provides cash on demand. Okay, guys, I'm not going to go into trading. I'm going to go into trading. Like this whole concept of trading, where did it start from? Who decided that, okay, people can actually trade? Where did the concept of trading start from? The concept of trading started from, typical commodity trading. So you have a party here on the one hand, okay, another party. So in a particular trade, you have two parties. Okay, two parties have to be involved in a transaction. Those that and there has to be an asset, an asset of value in that particular transaction. The parties that are involved have to be those who are willing to buy the asset and those who are willing to sell. If you don't have buyers and sellers, you don't have a transaction. Okay, so you have to have a willing buyer, a willing seller for you to have a transaction. So in giving you the analogy of how it is that trading came to be, I like to begin from the traditional commodity exchange. Okay, in this particular example, this gentleman here on this side, let's call him the buyer, while the other gentleman on this side is a seller. For a trade to happen, this gentleman, there are a number of things that you need to note. Okay, first, there has to be a consensus of value, which is known as price, between within these two sort of, and that consensus of value in this case it's independent of these two guys in the traditional market, because the seller cannot just set his price arbitrarily, especially in a market where he's not the only seller. So the consensus of value is usually by the larger market. If you go to the market now, you want to buy a commodity, you get in there, you want to buy a commodity. Okay, you want to buy a bag of rice, for instance. Okay, who sets the price? While there might be slight variations in price, there's going to be like a mean average of that price, because one individual cannot just say, okay, a bag of rice is $1 million. It's not, even if he's a willing seller, it's not going to get a willing buyer at that price. So first, before you have a trade, you have to have a buyer and a seller, and there has to be something, okay? And there has to now be a consensus of value that is independent of the two parties. Okay, now this consensus of value that sets this price, as an example, is what you know as a larger market. Every single asset in the financial market has a price that is set by the larger market. Okay, so when a trader who's coming inside, who wants to sort of trade a particular asset, the real job of a trader is to understand the sentiment of the larger market. And there are a number of tools that you can use to achieve this effectively. Okay, so now for this particular buyer to buy, for this particular buyer to part with this, he has to believe, because in trading the financial market, when traders purchase or sell an asset, it is a function of their future perception of where that particular asset is headed. I'll give an example. If this particular buyer here, who has cash, for him to agree to purchase this particular drum, he has to have a sense that this drum will rise in value. So that's why he will give up this, do something like this, give this up in order to be able to have this. And likewise, you guys understand what I'm saying? What I did, I'm going to do it again. So for this particular buyer for him to have a sense that, for him to enter into this transaction at this current price, he has to look at this price and say, I think that I should buy this drum because this drum will rise in value. So there has to be a perception of future value for the asset you are trying to take. That's how it is. And this is, of course, this is traditional commodity exchange. Everybody, we all do this every day. So it's not like it's a strange concept. So you have the buyer releasing the money, while the seller too has to believe that this drum will not continue to rise in value. In fact, he has to believe that the drum possibly will fall in value. So he collects the money. I hope you guys are getting it. So in every single time that you have a trade, there are those who believe that the asset will rise. There are those who believe that the asset will fall. Now, what now determines who profits? What determines who makes money is the larger consensus of the market. So between us on this particular example, this particular analogy right now, who makes money will now be if this particular drum, now rises in value. Clearly, it's the buyer that is making money, because after purchasing the asset, the asset has now risen in value. But if the price of this drum, if this drum falls in value, it is the seller that makes money. I don't know if you guys are getting it. So this is a simple analogy. When we talk about trading, everyone is talking about trading. There's always an underlying asset exchange of value. So trading doesn't come from the sky. There's something. So this is applicable even in currency trading, whether it's stock trading. So you can replace this drum with stock. You can replace it with crypto. You can replace it with anything. The principle of trading is one and the same. So this is, of course, partly why I say that if you understand the basis of trading, you can profitably begin to play in the financial market. You can dabble, you can play, pick a number of assets and begin to see how those assets. And by the way, guys, every single day as we see, for those of you who have never watched Bloomberg before, you should go get that channel rather than watching traditional channels just purely for entertainment. You want to get that channel so you begin to see that every single day prices are changing. Those price changes mean opportunity. So this is the basics, this is the foundation of how commodity exchange happens. Now in this example, let me give you an example. So the larger, if as an example, the larger consensus of the market now believes that this price has risen. Remember, that consensus is independent of the two parties in the transaction. Clearly, the buyer makes money because now his asset has risen in value. So if this price rises to like 110, it now means that one drum now exchanges at 110. Who makes money? The buyer makes profit of $40. Because if you compare, now if he takes this to the market to sell off, it's going to have, if he compares it to the price he bought, the price he's selling will now be, it's going to get $40. Do you understand what has happened now, guys? What has happened now is an increase in value for the buyer, that is, for the buyer. What has happened for the buyer right now is that he has been able to create money, not by, working physically or whatever, but by holding a valuable asset through time. The principle of trading is about find demand and supply, understand it. I'm summarizing it. It gets complex when you begin to deal into little bit of details, but the principle is that money can be created from the moving prices of assets, instruments, to use the right word. There are assets that are changing in price that you need to understand how to position for, whether those assets are rising or falling, and you sitting down there in your homes, you sitting down there in your office, wherever it is you're listening from, you can position and create money from basically not from anything real, but from the price change of an asset. When a trader makes money, what's really simply happening is that that trader has positioned effectively and correctly for the move of the price of an asset. Not like that trader exchanges service for money or something. No. The trader is making money from correctly positioning from the changing price. Now, if this is the principle of trading, you can replace this drum here, you can replace it with another currency. Let me show you how it is that it works on the currency side. People ask these questions all the time. How come I hear that people lose a lot of money in Forex? That how come it is that you can go out and say you want to buy, go to the Bureau de Change, for instance, and say you want to buy some dollar. Even if the dollar falls, at least you still get your money back, right? I'm going to answer that question. But this is the foundation of trading, guys. Let nobody make it sound as though it gets more complex than this. It's not more complex than this. So what happens is that they now take structures. They now created a trading platform from whence you can do these exchanges by yourself. Remember, how you now know that you can make money, or how you can now proceed to optimizing this value and making money, is by understanding. So you need to really understand. It's by having that skill to understand how to pick your assets of value. That's basically what it is. How do you know that you should be trading this asset or not? How do you manage your capital? This is really what trading is. Whether you're trading whatever it is you're trading, this is the principle of trading. So I'm going to give you a similar example of currency exchange. The same principle that I gave is what applies here. You would always have two parties in a transaction, the buyer and the seller. Buyer and seller come with what you call they purchase, they would place value on an asset. In this particular example, for a trade to happen between these two parties, this guy with the dollar he will have to give up this dollar in order to purchase this asset, euro of value. And this guy with the euro would have to give up the euro to purchase the dollar. So it's like covetousness, if you forgive my word. Yeah, somebody has to covet something on the other side. So when you covet that thing, and you now position to have that thing, when there's going to be a larger market outside of the two parties involved in that transaction. That larger market is now going to be the determinant of value. It's going to be like the referee who determines who now makes money. So actually, the real job of a trader is understanding what that referee is saying. That referee being the larger market. That's the real job of a trader. And that's what we walk you through to doing. Understanding how the market, or understanding how best to position in the market, understanding market sentiment, understanding demand and supply, understanding key levels, understanding on and on like that, guys. On and on like that. So, well, basically you have this same example because I am teaching on the foundations of trading. Some people just go, they open trading accounts, they open trading platforms and think that trading is esoteric, basically like stuff that is in the sky, or like it's just built into the platform, or you just buy and sell. No, it is still close to foundational principles of trading that you and I know. Find something of value, hold it through time. Time now becomes something that can give you the return. So in this example now, talking about currencies, okay, the larger market that's independent of the buyer and seller now becomes the one that determines the exchange. In this example, 1 euro, the market says is $1.1950. So euro USD price is what? 1.1950. This euro dollar now becomes like an asset, and I'll get into that shortly. So what you have is, for a trade to happen, okay, the buyer must covet what is on the other side and seek to own that asset so that hopefully that asset rises through time. The same thing with the seller. He must covet what is here, give up something to have that in order for that to rise through time. So we have something like this, where the dollar goes here and where the euro comes here. Now that this trade, these guys have gotten into this trade, who makes money is now a function of the referee, which is the larger market. Now, what do I mean by the larger market? The larger market is the totality of everybody playing. The larger consensus of value, of price, is a function of all market participants. So a lot of times they talk about, in the Forex markets, you have a daily trading volume of $6 trillion. And that's a lot of money. That tells you that this transactional exchange is over $6 trillion. Now, I'm told it gets above 7 trillion per day. That's how much, in terms of value back and forth, transactional volumes is being exchanged. Okay, guys? So as I was saying, who makes money is now a function of which of these assets rises relative to the other through time. So in this example, for instance, again, we're assuming that this particular euro for the buyer now rises. The buyer makes money because what happens? What happens here? The euro is the asset of value for the buyer, and the USD is the asset of value for the seller, clearly, because after the exchange, that's what they now have. And what they have now, they hope that that thing rises through time. Anyways, in this analogy here, you have that the euro has risen relative to the dollar. So what you have is this guy who's holding the euro right here makes money. But remember, guys, if the reverse were the case and the euro fell relative to the dollar, it's the other guy that makes money. So listen, and this is another important point to dispel some of the myths that exist in the market. So when people say stuff like, oh, well, as the Forex market crashed, you can automatically see that there's no such thing as crashed, because it only depends on what side of this transaction you're on. So every time that there's somebody who's losing money, somebody's making it. And that's what happens. I like to say that the dumb money always follows this. Always the dumb people, not dumb people, dumb money always goes to the smart money. I need to process that information. So when people begin to lose money, what happens is that money that is not skilled enough, that money that is not aware enough, always gives itself off to the money that is smarter. That's why this is not a market you want to go without the right kind of knowledge. Because every time that you're posting, oh, I lost money, you better know that somebody's making that money. So if you want to be able to obtain the kind of value, you're going into this market with all these players, you want to understand, you really, really want to understand what you're doing. But if you do, you will now break away from sort of time for money type of a lifestyle that is based excessively on exchanging time for money, to a lifestyle where you can create money from the exchanges, from the changing prices of assets. This is the ultimate goal of every trader. This is why traders should begin this journey. This is why they should sustain it even when it's challenging. This is why they should seek knowledge ultimately. Okay, so in this example, you have the buyer who makes this amount. You have the buyer who makes this amount from the, and this will be my first introduction into what you call volume in trading. Okay, so the buyer, based on the exchange, if he's just selling, if it was just €1 that this particular buyer had, when this price rose, okay, because of the difference in the exchange at this point to difference in the exchange at this point, that guy will make $0.11. That's by when you subtract this price here, 1.305, subtract it from this. That looks small, right? It looks small, right? But I'll introduce volume a little bit. If he had bought 1,000 units, so instead of one, he had bought 1,000 units of euro, he would have made 110, because this would be 0.11 multiplied by 1,000. This is my first introduction into the concept of volume. As you know, somebody who buys $100, okay, from an Aboki guy will not make as much money if the dollar goes, let's say, from around 470. Imagine if the dollar goes to like say 550 as an example, maybe about 75 naira difference between what it is right now and such a future price. The guy who buys $100 will be buying it maybe about 475, 480. Okay, which means that $100 will be about 47,500. or 48,000, whatever the case may be. Okay, if the dollar now goes to if the dollar goes to 550, as I said, it will be able to exchange it back at 55,000, sufficiently making maybe about 7-8K thereabout on that $100. But the guy who does $1,000 for that same price dollar exchange change, the same time, whatever, but higher volume, it makes about 70-80K. So this is the first introduction into the concept of volume. So when you're trading in the financial market, volume is important. And I'll touch a little bit more on it, hopefully, before we're done with the class. Okay, because and I'll touch on the two kind of risks that exist. And it's important for us to understand that everything I'm saying right now is profitably applied to any asset class. It's just that you're learning through Forex for the first time. Volume risks, the risk on the volume that you are exposed to on the price of a particular asset is important. Okay, but I'll talk about that a little bit. So the lot size measures the quantity. The lot size is what measures your volume. So in this previous example I gave you the example of somebody who's buying $100, somebody who's buying $1,000. So the guy who's buying $1,000 has 10 times the volume as the guy who's buying $100. So there's something called volume. There has to be volume in trading. You go to the market, you want to buy something, there has to be something called volume in trading. And this is it. So in the financial market, especially in the Forex market, you usually call it lot size. So currencies are traded in lots. Now, this calculation is one that you want to remember as you go, because if you're trading Forex as an example, it's very foundational. Okay, very foundational. Currencies are traded in volumes. You have volumes starting from 1,000 on most trading platforms, 1,000, 10,000, 100,000, 1 million, on and like that. So on the trading platform, when you want to place a trade, forgive me, let me just dabble slightly into the trading platform now as an example. Okay, just forgive me. Now, in the trading platform, when you want to place a trade, you see, and I understand that, hey guys, we've not actually gotten into this trading platform, began to explain it a little bit. But when you want to place a trade, you go to when you want to buy or sell something, there's going to be something called volume. So volume. Now, this volume does not mean you would come and place 100,000. What within the currency market it understands is lot size. So there's already like a sort of like an average calculation of how that is done. Okay, so on an average, if you want to buy or sell a volume of 1,000, the corresponding lot size to be imputed on the trading platform is 0.01 averagely. Now, there's something called profit per pip. Okay, that is the potential profit per each unit rise of the price of that asset, and that's what you know as 10 cents or 0.1. I'll explain this in a little more detail later on. But suffice to say for now that you have volume, and then there's another rating called lot size. Okay, a volume of 1 usually corresponds to 100,000 when you're trading a lot of currencies. Now, this profit per pip here, forgive me for a moment, I'll explain this in a little bit more detail as we go along. But just understand the principle of that, hey, in the markets, when you're buying or selling, okay, there's such a thing that has been created, known as lot size. It's like, lot size is like, oh, I want to buy eggs, but I'm going to be buying eggs based on crates, 1 crate of egg. Okay, and of course, 1 crate of whatever. So it's a transactional size that the trading platform understands and has become like a standard within the financial market. So let's look at how volume plays out. I think I already explained this, the example, so I probably should not overflog it. Okay, so but let me just touch on it a little bit. So if you have like Euro USD at 1.2300, okay, so somebody buys a volume of 1 lot of that, and somebody else buys another volume of, a volume of 0.01 lot. Now, notice that this 0.01 lot is corresponding to 1,000. And another person buys a volume of one lot, which of course is corresponding to 100,000. What happens here, if the price of that particular asset rises, say for instance, to an exchange of 1 to USD, that is €1 costs 1.230, but it now rises to €1 costs 1.250. So what's going to happen? The price difference between these two is 0.02 euros. So for one unit, which is a lot of 1,000, you just multiply 1,000 by 0.02. A profit here of €20 for the same price move, guys, because the move was priced from here to this particular place. Okay, but it was 100,000 volume. You can see here that for that same price move, you have €2,000 in profit. So here you have €20, here you have €1,000. This is basically the cost of volume. Okay, sort of digging deeper into helping you to understand that, listen, guys, volume is important. And probably one of the most important things as a trader is how you appropriate your volume. More detail as we in fact, it comes from three things. Number one, your understanding of the risk. Number two, your quantification of the risk. Number three, your whatever it is you're trading, stocks, bonds, not bonds, because those are, but any asset that has varying prices in the financial market, if you are trading those things, you must have, number one, understanding of the risk. Number two, quantification of the risk. Number three, management of the risk. So if you're default in any of these three, you aren't yet a trader. So, but we'll get into those. You are what you call, you are like, I don't know, you're even where they see opportunity. Okay. I am joining a lot of people to say, hey, Bitcoin is an amazing asset because of a number of reasons, but it is not sufficient to take decisions on the amazingness of the opportunity. It's not just Bitcoin that is offering massive opportunity. Even in the currency markets, you continue to see different asset classes, different currency pairs that offer amazing opportunity. You see commodities offering an amazing opportunity. You see gold. You see a number constantly from time to time offering amazing opportunity. But you're not a trader yet if you don't understand, if you can't quantify, and if you can't manage those risks, guys. So listen, let's go into what those key risks are. You first of all have to understand what the volume risk of any particular asset that you're trading, because the volume is taken by you, the trader. Hey, Mr. Trader, how much Bitcoin you want to buy? You're not using it because, hey, I find that a lot of people can relate better with it. We'll get into how this drills down into currencies and all of that. Hey, Mr. Trader, how much crude oil do you want to buy? Do you want a volume of 1.0? Do you want a volume of 0.01? That's the lot size of that. The market doesn't determine the volume for you. You determine the volume yourself. So in pro trading, one of the things you are subject to is you have to understand how to manage these things. Another piece of trading is volatility risk. All financial trading. So, and this has to do with how quickly the price of a particular asset can change. And there are tools that can use to measure and effectively pre-plan volatility, that is price change. So, there are dimensions when you begin to get into this stuff. So you can measure it ahead. You can plan it ahead. Some people trade assets, they have no idea what volatile assets are. First is it has to be responsible. You have to understand what particular asset, you plan those things, and then you can begin to take opportunity in there. So All of these things I'm saying is when you pick one particular asset and you're trading one particular asset, there's another risk. Okay, that they talk number of assets. Okay, the risk from common exposure. I should add that, but I'm not going to do that because I'm not going into that section. From common exposure, assets that move along the same way. That's another level of risk. Usually, when you're dealing with a portfolio and trying to build a portfolio, we're not going into that. But I think we should take a break right now, a short break, because we've been in on this. I'm going to allow you guys to, I'm just going to allow you to, we'll just take a very short break. We'll just take a very, very short break right now, and then we'll continue in a moment. Okay? A break, and then we'll continue in a moment. Okay, looks like okay, while the break is coming up, did I see a couple of questions here?
On meeting with Wahili Market, I found out that there's no Holy Grail anywhere. The Holy Grail is you, because you are the only constant thing in the market. Good morning, everyone. My name is Wahili James. I'm a graduate of the PMI Professional Mentorship Initiative of the Wahili Market, a Forex Institute. I just finished a 7-week intense course, beginning from the fundamentals of Forex. We delve into the technical aspect of Forex. We moved a step further into the quantitative aspect of Forex, which most people do not even talk about, except the institutional traders. We moved into portfolio management, building up a portfolio, speaking about diversification. Not just that, we moved into economics, understanding the law of demand and supply, how it affects the currencies we're trading. We moved into macroeconomics and microeconomics, these things that affect the policies, that affect the movement of prices. These are the things and much more that we learned in Wahili Market. Thanks to Wahili Market for unveiling this secret to us. I can boldly say anywhere that I'm a trader. I am a trader. Before, Forex traded me, but now, not now. Now, I'm a better person. And I'm encouraging everyone out there, if you have ever lost money before, or if you've ever dreamt of trading Forex at all, or whatever kind of trading, be it commodity trading, you want to trade oil, any form of trading, come to Wahili Market. You will gain value for your time and value for your money. Thank you very much, the Wahili team. Thank you, Mr. David Alagbara. Thank you, Mr. Joshua. Thank you, everyone. I remain James Adewi, a proud alumni of Professional Mentorship Institute of Wahili Market. Thank you.
Yes, yeah, so I think we can continue right now. If you can hear me, I'd like to see your comments if you can hear me. Okay, so that we can proceed with the training right now. If you know you can hear me, please just put in your comments there so we can proceed. I'd like to see your comments saying that you can hear me. Okay, if you can hear me, please just signify that you can hear me. Okay. All right. So I'm gonna be. I haven't seen those comments, but I'm gonna assume that you can hear me still. So I'm just gonna be proceeding with uh, um with the presentation. So guys, everything that I shared here, okay, everything that I shared here, you can ask questions if there's anything that you do not understand. I don't see a lot of questions. I encourage classes that have questions. Okay, even though I understand that how we're using this now, the sort of technology we're using doesn't allow you to ask your question directly, but it's just this technology in our professional mentorship initiative classes. If you're seeing that, you engage with me one-on-one, like we do a lot of stuff we do market analysis. There's a whole lot. So it's the technology is different. So it's not like this. You can ask questions. So let's talk about the roadmap to trading success. How does a trader begin this journey and win? Considering that a lot of people start this journey and they don't win. A lot of people go on YouTube, download all types of videos, try all types of strategy, take the strategy, dump it, take it, dump it, try something else again. What are they looking for? Looking for some kind of a holy grail. Okay? Looking for that one thing that will never make them take a loss or something. It begins from I'll share with you the roadmap. So keep it in mind mentally that this is how you want. If you take this step, trust me, you're going to cut out a lot of time. That will be and it'll be very for you on your practice. Prioritize, learn, and practice. This is one business where the money, like I said, the dumb money gets given to the smart money. Every time that people are saying, oh, they are losing money, somebody is making the money because it depends on what side of a particular trade you're on. The price of an asset is rising or falling constantly through time. You have the option to either be a buyer or a seller of that particular asset or stay away, as the case may be. The prices are constantly rising through time. So whether you benefit, whether you are the profitable one or the unprofitable one, long term, I don't just mean on one particular trade, long term is a function of your knowledge. And that's why you have to prioritize learning. This is not an industry for the lazy. It's not an industry for the lazy. This is not a business for the lazy. But the beautiful part of it is that if you can say to yourself that, hey, I'm going to do this. I'm going to prioritize learning. I'm going to spend my time trying to understand how these things happen. Asking the right questions for success. You're asking the right questions for success. So the next thing you want to do is apply a good trading strategy. This is very important. A trading strategy that is suitable to your reality. There are different kinds of traders. There are traders who have more time, so they have to sit in front of this. They want to sit in front of the screen for a longer period. There are traders who don't have as much time to, they have other jobs and other realities that they have to cater to, so they have to structure their time better. So in talking about a good trading strategy, you have to. But how then do you even know a good trading strategy? The internet is replete with all kinds of strategies. How do you know a good strategy? What counts as being a good strategy. Up to trading success will have you, the strategy is given to you. One of the things I shared in the last session of our Traders Hangout that we had, if you missed that, you can go watch the video. I shared about what you in strategy development, okay, a place of research. Whatever idea that you have is just an idea. You now have to do the work to place trades, to buy, to sell, using that idea. And by the way, guys, for those of you who are new, what do we mean by a trading strategy? A trading strategy simply means how you determine which particular trades you want to take. The entire thought process of how you determine entry and exits of the trades that you are taking. So you must apply, after prioritizing learning, you must apply a good strategy. But before you even know that a strategy is good, you have to be skilled at taking these strategies as ideas. Then, for instance, this you watch a video or you watch a resource that says, hey, you should do this. You take that as an idea. Then you understand how you can progressively place trades over through a number of samples, okay, a number of trades, and begin to understand the behavior of that strategy. One of the big problems a lot of people, first of all, is you can't be that type of a trader and hope to succeed. It's not possible. You can't be that kind of a trader just watch a video and next thing it can't work that way. Applying a good strategy means understanding how to research about the behavior. First of all, you need to know what a good strategy is. For a lot of people, they don't even know. If you ask them, okay, what is the average success rate? Have you ever done a test, placed 50 trades on a particular strategy so that you know what the average success rate is? Most people, if they place 5 trades on a strategy and the strategy is not working, they moved to another strategy. So in knowing what a good strategy is, or in arriving at having a good strategy, you understand how to optimize those strategies. What do you have to change? How do you improve? What do you do differently? Do you reduce your volumes? A lot is involved in that process, so that at the end of the day, you have better capital growth performance, so you can grow your money better. You learn how to manage volatility and volume risks. Not all assets are the same. Okay, some people, anyway, we teach a lot of these things, through time, but I'm walking you through them. You get a mentor and or a trading community. Get a trading community. One of the things I like to do, and I like to share with my team all the time. One of the things I do is I do a lot of workout. Like I exercise. I almost every morning I'm up jogging early on. My routine is pretty predictable. So I get up, check the charts very early, way before for those of you who trade, way before the London session begins. I'm up, I'm checking, looking for either opportunity or managing existing trades, whatever. You don't have to be that way, getting up early or whatever. I'm just saying, remember I said something that's good for your own reality. And then next I get up, some exercise, hit the gym and whatnot. So one of the things I did, I constructed like I set up a gym in my house. And that gym, I realized that I had that gym for almost a year and a half, but I never really used it. I had everything. I spent some money on that, got all the equipments together, and I got everything because I was interested in that. But you know what? I never really used it until I made a subscription for a gym. That's when I started getting results, because I would get into the gym and I'll be like, wow, look at what this guy's doing. I'm amazed at what he's doing. Look at his, I started learning. Number one, I started getting challenged on the programs I knew. For anybody who works out, the stuff you call programs, basically a way in which you exercise. I started getting challenged. So if I would normally do like on a bench press, for instance, I probably would normally do like 10 sets of, let's say, 60, 70 kg, whatever. I saw people who were doing 100 kg and I was motivated. They challenged me on what I was already doing. So number one, when you get a trading community, it should challenge you on what you already maybe even know. So get a mentor and get a trading community. Very important. Then number two, it should introduce to you in the bounce and exchange of information. You should not be alone. You should see things that motivate you. For a lot of traders, your family members aren't traders. They cannot understand your reality. So you need to find a community. If you must grow, I couldn't achieve the growth that I had, and I'm super excited that I can say, oh, I want to do this much work, walk this much, run in a week, stuff like that, because I have a community that spurs me on. So get a mentor and or a trading community. Use journals from the start to track your progress. So you begin to record those trades. You begin to measure so you can improve. Again, I would say anybody who follows me, you know, I always say it. You cannot improve what you don't measure. You cannot improve what you don't. How do you know that you are getting more? Oh, now I've made like $100 or that's not the measure. There are a lot of things that you begin to measure in the effectiveness of your strategy. Okay, guys. So we are like almost at an hour. Okay, to just go into about a number of things because of time. So I'll give you a couple of nuggets on how you can get successful. So even if you never really benefited a lot, okay, today is supposed to be to help you to begin to understand is to help people get a mindset shift about this thing called trading. It begins from there. Okay, so if you must be successful, you need to learn how to manage your emotion. I mean, I manage your emotion. Oh, I just made $1,000. Oh, it's not about that. I'm at a point where even if I made $1 million, you know, it's nothing to be screaming about. I say that, and a lot of people are like, "Oh, you must have a lot of money." It's not about money. It's not really about money. It's about your level of growth mentally in the market. Okay, it's about trading for the long haul. And I'll talk to you. Elon Musk said, for those of you who know about Elon Musk is briefly was the richest man in the world. You know, just got toppled. Founder and CEO of Tesla. He said, you need to not be excited about the rising price of a stock, because if you rise by 10 times, you feel 10 times smarter or 100 times smarter. Because if the price of that particular stock falls, you feel a lot more stupid. There are a lot of people who now that point in trade also quantify these contracts and XYZ predetermined amount. So, you know, if you notice, a lot of what we're talking about involves risk. Trading for the long term, trading for the long haul. You're not trading for a day. You are trading for the long haul. You want to accumulate capital over a spread of time. Okay, guys? You stay consistent. I always say this stuff. Trading is like anything. It's not enough for you to know. Knowing is not enough. Doing is what gets you the result. Oh, I know how to clean my room. Does that get the room cleaned? Absolutely not. It's not a knowing. That's such a basic thing, because hey, I know how to clean my room. I just need to. That's not enough. You actually have to clean the room. So staying consistent is about getting up on your charts, looking for those opportunities. That's all this stuff calls for. So you need to develop the right kind of habits in here, okay, in order for you to be able to do this. But there's beauty on the other side of it. So the 30 simple rule is that you should place at least 30 trades on a particular strategy before you can begin to talk about the performance of that strategy. A lot of people don't do this. Have a trade plan and trade it with discipline. We'll go into as strategy. You cannot optimize the strategy. If you, for instance, don't have whether previous data, historical data, as in back test and forward test, you can't talk about optimizing. What is the meaning of optimizing? Making something better, making it more efficient and productive. You cannot optimize something that you've not effectively and efficiently gathered data about. We'll get into a lot of those things. Build a trading habit consistent to your reality. You're a doctor. You get calls. You're a doctor. You earn $400,000, slightly less than $1,000. You want to scale your income to be able to earn $3,000. You know that trading can do that for you if you know it right. You know that. But you're a doctor. You're not going to abandon your career. So you have to find a trading style that is suitable for your reality. Okay, a lot of people fail because of a number of all these reasons. Okay, guys, I'd like to get into such things as trade and account planning, but I don't really have the time to do that. Starting from tomorrow, we are going to go into sort of proper trading. Proper trading, sort of proper trading examples and all of that. Because our time is fast spent right now. I'm just looking at one extra area where I can give you a little value just before you leave, okay? Just before you leave for today, I'm looking for an area, especially for the new guys who are coming. You are hearing all of these things. You are listening to all of these things. You know about, you clearly can see that there's opportunity, but there's much work to be done. But you're asking yourself, okay, how do we get started? By the way, I think that we have a video, okay, that's out there. Let me just check this for a moment. I think we have a video that's out there. Let me just check this for a moment. I think we have a video that's okay. So I can see a question here from Ms. Charles who says, what is backtesting? Backtesting basically means that you have a strategy. Okay, so you take that strategy and you have a window period in the past where, first of all, your strategy should tell you about, okay, what you have to see before you buy, what you have to see before you sell, what's your stop loss, what you take profits, all of these things. These things are new for a lot of new people who are coming in on the call. They're new for you, but we'll delve into those things tomorrow, okay? But back testing is basically you look into the past, you use past data. You say, oh, if I've been doing this thing in the past like 1 year, what kind of results would I be able to achieve? What kind of results would I be able to achieve? Then you note that down. There are two ways you can do that. You can do what you call a manual back test, that you're not using any algorithm, and you can also use a back test without using trading algorithms. So those are the two ways in which you can effect a back test. Okay. So but if you've never done any algorithm development before, or you do not understand how to take or you don't have the contacts of people who can help you develop your strategy into an algorithm, what you want to begin from is a manual back test. Okay, so there's so much, guys. There's so much, but the principles that guide all these things are very simple. Okay, if you say something works, look into the past and see how many times it has worked. That's what you call back test. If you say, okay, this thing works and helps people make money, all you need to do is to look into the past and say, okay, if you've been doing this thing for the past 1 year, how many times would they have worked? What would be the win ratio? What would be the success rate in the past? So you can now know that, okay, based on, well, XYZ, I think I feel comfortable enough as I go into the future to continue to do this. You get? So forward test is now like, for the next 3 months, I will try this thing. And when I try this thing, I want to see how many times it worked. A good strategy should have a measure of back test and forward test before you can own that strategy. It is when you're now doing this thing, you now say, oh, well, I noticed though that every time I change this a little bit, it tends to make me better. I make a little more money. That is what you call strategy optimization. All these things are things that if you're a trader, you don't just go to the internet and take a strategy and then voila, you say, oh, this is my strategy. I just learned it. You have to learn how to do that for yourself. Okay, and this is that industry where it's that do-it-yourself industry where you, the person, you have to be doing that work for yourself. But ultimately, when you do all of these things for yourself, you become better, you become more efficient, you can make more money, on and on like that. So for the purposes of those who are new, like I said, all these things appear new, but from tomorrow's class, you will be able to have a sort of a grander idea of how all these things work. I'm going to put a link up on your screen right now. I want you all to go to that link and use that link, okay? Because that link is the board for this program. We have what you call a digital board. If you go to wahilimarkets.com/etc board, it tells you the structure of the program, this program that we're running right now. The board for that program is there. So if you go through that, let me share my screen now and show you what the board has. The links to tomorrow's session, for instance, will be there. On that board, for instance, I'm going to try to see if I can communicate a few things to you. So this is what the board looks like. Okay, so you can see when you go to the website, you'd see blah, blah, blah like that. You see a board to set up a demo account, to download the trading platform. All of these are videos. And then you have live links to, so for instance, this is the first session today. This is live link. That's where you used to join. The second session tomorrow, you're going to have this particular link. In that tomorrow's session is when we begin to go into other sort of more technical areas of Forex. I wanted to give as much value to different participants from different places. And hopefully at the end of this session, let me tell you guys what we're going to do, which is very fascinating. We're going to try to do a challenge that gets you trading to at least 2 strategies before you are done here. And you're not going to just trade them the way you just open up an account and just trade a few. You're going to have a target of the minimum number of trades that you're going to have. Because if we're talking about you having sample size, so you should have done, if you're talking about you doing strategy development, strategy optimization, it begins from you getting data. So after giving you these strategies, 2 strategies, showing you how it's done, and we're doing that tomorrow, showing you how how you can get started with these strategies. You do a minimum of 30 sample size. So, and you run that one next week. And I want to see the results. I want to see that. I want to see what you find out that you're learning from that process. And that's going to be a very practical process where you all get up on this stuff. You are taking these strategies and you're using it. It is at that point you begin to understand certain things about trading, that it is not about just numbers. It is not just about, it's just about the number of strategies that you have. That's not what it's about. Okay, it goes beyond there. It's about how much information do you have about the strategies that you are using. If you understand how to optimize the strategies. Okay, guys. So, but before I go into that, there's something I want to share with you, so that I want to first of all disabuse the minds of people who don't understand, who don't have a vision, stuff like about the idea of about trading, as in, just a second, guys. Let me get my slide for this. It's something I want to share here, okay? Because this is so important. Right. I always like to share this because I see too many people don't have a long-term vision for what trading is. They don't understand the big picture. The big picture being, where are you going with this trading skill? Okay, so somebody's asking, please, are we using an application for the trading demo, or everything is on the trading demo in the link? Yeah, everything that you need is on that link. Everything that you need is on that link. But let me just quickly share this, because as you get started on your journey, you have to have a sense of where you're going with this journey, especially those of you who are new. Get a sense of, where am I going with this particular journey of mine, this trading journey that I'm getting set to get on. So this is the big picture, guys. This little sort of challenge, we're just going to take simple strategies, very simple, and we're two of them. If possible, we can break people down into groups. Okay, we have we'll find out a way in which we can engage those of you who are on this and get it more practical. We'll break it into groups and get you doing this maybe for next week, 2 groups. Okay, you're going to get the big picture. It begins, as an example, look at these 2 traders. Okay, when you learn a strategy allows you to begin to place trades. Your strategy will allow you to place a trade 1, trade 2, trade 3. You will have the knowledge to be able to say, okay, now I want to go into this market right now. I want to buy or sell this. Oh, I want to go into this market. I want to buy or sell this. We'll explain all of this tomorrow. How you can come in here and just buy or sell based on a very, very simple strategy, nothing complex. But it's not about the strategy. It's not the strategy we're trying to teach you. It's about the big picture of trading. The big picture of trading is more or less like saying your results are not about one single thing, are about the collective of things that you do across a period. Your trading result as a trader, it's not about just that one individual trade. It's about the collective of trades that you have over a time. And you need to learn how to begin to do that. Trade with the long term in mind. So one of the personal things I've thought about this whilst developing this ETC, I was like, even from the very beginning, even at a new point, people need to begin to understand that this game is not a one-day game. It's not a one-trade game. I don't want them to understand at a later point. I want them to understand now. And understanding that big picture is why I'm sharing this stuff with you. So that even as you go into trading, you begin to know what things should I focus on. You begin to understand that strategy is just one leg out of a tripod in the success of a trader. Okay? Because when you look at this trader 1, for instance, he places 9 trades and he wins 8 of them, but loses 1 trade. And in spite of the fact that he has placed 9 trades, his 1 loss still means that if you take all these sample trades that he's placed, all these 9 trades, the result on his own money is still negative. But here you have another trader who has won 2 trades and lost 7. But when you take the total sample, his trade result is still plus 300. So if his account, for instance, were $1,000, his account now has grown to $1,300. From the standpoint of capital increase, this trader has grown his account by 30%. Whilst for the same capital, this particular trader has lost 20%. It is important, very important, to understand how to do this. That's why we're going to introduce that trading, a little bit like the trading challenge. It's not going to be as supported, not nearly as supported as what we have in our more advanced classes, but I feel like this kind of value is useful for new traders. So you need to understand where are you going with this trading journey. You know what exactly you should be looking out for. Okay? So you will learn all of those things. So between tomorrow's class and the class next tomorrow, you're going to learn a strategy that you can get started with. You learn about the functionality of the MetaTrader. Okay? You learn about which is the trading platform. Okay? You learn about how do you buy and sell? What exactly should you be clicking to buy and sell? You learn about how to manage your risk. Okay, before the end of this class, you learn about that. And we'll give you, starting from tomorrow, some quizzes and challenges that help you test your knowledge on these things. You begin on the demo account. So you practice all of this information on the demo account. You learn how to set up a demo account, you already, though, I expect that if you are on that board, the videos that help you set up a demo account should already be there. So you learn how you can set up your own demo account. Okay, you learn how to manage the risk on those demo accounts. You learn what are majors, minors, and exotic pairs. And hopefully that sets you up. If you can understand that and understand that trading is for the long journey, you begin to know how next you should seek your knowledge. Because I see one of the big problems with a lot of people, they don't even know what knowledge they should be seeking. They are seeking the wrong knowledge from the very beginning. Okay, guys, I'm going to allow for a few questions now. I'm going to allow for a few questions. Then we'll close the class for today. Then I'll be looking forward to seeing you tomorrow. Okay. Okay. So I'm gonna allow you to have a few questions. Then I'm gonna. Okay. So I'm waiting for you guys. You can bring in the questions if you have questions. Okay, I'd like to listen to you. If you have questions, you can ask your questions. If there anything that you'd like to know. Okay, guys, I'm listening. So if you have any questions whatsoever, if you have any questions, please just put those questions through. Put those questions through. Put those questions through. Put those questions through. Okay, so I'm guessing that you don't have any questions, or like or the questions are coming in slowly. I don't know. I can't see any of them yet. But in the absence of that, I'd like to thank every single one of you that's coming to join us. Okay, I'd like to encourage you. The journey to successful trading, the most important requirement is your commitment to knowledge, to research, and to just learn. Okay, in the financial market, that's what your that's all that the market requires from you. Okay, as we go through tomorrow's sessions and all of that, somebody's asking, Sintero Dave is asking about risk management. Before we're done with these sessions, I will touch on position sizing and risk management. Okay, somebody says, please, what is the name of the TV channel? You suggested that, I said you should watch Bloomberg. Okay, Bloomberg. Okay, like go to watch Bloomberg. Go to For Every Trader. Okay, Bloomberg. Okay, so every trader, you begin to understand that. Listen, this stuff is global. There's a global space around this. You will want to play. You want to understand how to play in it properly. And somebody says, I want to know if you can demo trade on your phone. Absolutely, you can demo trade on your phone. All you need to do is to go to download on the Play Store or on the Apple Store the MetaTrader 4 or the MetaTrader 5, as the case may be. Those are the two most popular trading platforms, and they provide you opportunities to do technical analysis and every other thing that you're required to do. Okay. All right, guys. Okay, so we're almost approaching the end time right now. I'd like to thank you all, and this is just going to be the beginning. These videos, I will find out. Somebody saying, what is Bloomberg for? Okay, so Bloomberg supports. So here's another question. Somebody's asking. Somebody's asked, okay, well, let me answer the question about Bloomberg. What is Bloomberg for? Bloomberg is basically a platform that is dedicated to financial markets, to learn about the financial market, to reporting about the financial markets. So you see a lot of stocks, you see a lot of currencies, you see commentators who come in. Why this is important is to be able to help you, the individual, get a wider knowledge of the participants in the market. That's it. It just gets you exposed to what's happening. Are synthetics analyzed the same way with indices? So one of the things you should understand, I see a growing interest for people in synthetic. Okay, so what is synthetic? Synthetic means something that it's not the original. Basically, was built to simulate the original. So the synthetic of any particular asset is something that is supposed to derive its value from so synthetic, for instance, you have those indices deriving their value from other things, okay, from other assets, from other instruments. Okay, now the degree at which they are correlated to those instruments differs, but Your question, I suppose, will probably be: are those synthetic analyzed the same way with typical assets? Okay, and then the answer will be pretty much technical analysis can be applied profitably to the analysis of those things. If they get their value, if those assets get some of their value from typical assets, then it follows suit that if they do get some of their value from typical asset, it follows suit that they should respond to the things that typical assets respond to. The only thing, of course, is that to what degree this, would now be the function. So Charles is asking, he says, somebody's saying, how do I start trading on my demo account? Remember everything that we said about trading. Remember, you got to have a strategy. Okay, you've got to, first of all, have a strategy. Tomorrow, and from tomorrow and next tomorrow, we talk about using the trading platform to talk about strategy so you can begin to use those. Somebody's asking, what class of indicators are preferable? Is it leading or lagging indicators? It's a good question. I think that it's not a preferable thing. We have to, the questions that you ask about the behavior of the market, how you ask, the way in which you ask, there's no one root way in response. Okay, there's no one answer. Okay, is it a leading indicator or a lagging indicator that's better? Generally, lagging indicators usually are more suited to trend type trades. Leading indicators are usually more suited to reversal type, to help you predict or preempt. That's ideally what their tools are. Remember, all of these indicators are still based on past price action, so everything needs to be put in context. Context is everything. So it's not a question of which is better or which is worse. It's just about context. So when you take these indicators and try to develop strategies using them, when you take these indicators and try to develop strategies using, I'm seeing quite a lot of questions from Charles right now. Time our time is getting fast spent. But when you take a number of these indicators and try to use them in developing a strategy, there are a number of things that you have to consider. Okay, it's just as well that you can have, you can look to getting information from a leading and lagging indicator. However, you got to be cautious. Got to be cautious that you don't get paralyzed with excessive analysis. Just pick the things that can help you do X, Y, Z. You're looking for a trend, look for indicators that can help you do. Time is the same time, 7 p.m. Sintero is asking, what time is it, guys? Somebody saying, what is quantitative analysis? What do you understand by quantitative? The meaning of quantitative is more suited to data. Okay, more suited to data. Okay, so a lot of what quantitative analysis has to do is it has to do with trading with data, basically in a form that's requiring of algorithms and the likes, usually. Okay, so generally there are two kinds of analysis. So when there's the discretionary analysis, which basically you take discretionary trades, and then there's quantitative, which involves more use of data, more use of tools. The more of data you can crunch, the more algorithms you can utilize. That gets an analysis more quantitative, as the name goes, quantitative, the use of data. I hope I've touched on a few of those questions. You can still file your questions together and make sure that, so you want to find out if the sessions will be recorded so we can have a playback. So Mr. Riomi, final question I'm going to take. Will the questions be recorded? The questions are automatically being recorded. The question you should be asking is whether we would not put a price tag for the replays, especially for the classes tomorrow and next. Okay, I know that my team always puts the first session of the early trading course free and available to everybody. That being said, guys, I'd like to thank you for the very for being very patient to walk us through. To stay with us until the end. I hope you've gotten a couple of nuggets from tomorrow. All of those things that I mentioned that we will share, we will share them, and I really, really know and I feel confident that you get a lot of value from my side and from the entire Wahili Markets team. I'd like to say thank you, and I'll see you at the next class, which holds by 7 p.m. tomorrow. Remember that every information about this class will be posted on our digital board. Once again, the digital board is wahilimarkets.com/etc-board. And once again, every information you require will be there. There are phone numbers that you can call within our team, or you can reach out to us within that particular, within the discourse group. Thank you guys, and bye for now.